Once again, good afternoon, my dear students. So in the previous class, we have discussed about the methods and steps of the calculation of national income by value-added method. Today, we will just go for some more topics on the value-added method, such as problem of double counting, how to solve the problem of double counting, and what are the items to be excluded and included in calculation of the national income by the value-added method. But prior we go to the double counting, I want to clarify one thing, that I had committed one mistake in the previous lecture of the value-added method. So you will find that mistake in the last page of the video. That is about 9.45 seconds up to 10:20, 9.45 minutes, I mean, and 10 up to 10:20 minutes. Around that timing, in the last line, I have just written in the formula of national income calculation, I just wrote minus an IFA. It should be plus an IFA. I just corrected the mistake in the calculation part. Okay, today let us discuss about the problem of double counting. So first of all, we will see what is double counting. So while estimating the national income by the value-added method, so sometimes the value of a product is counted more than say once. It is called double counting. So it leads to overestimation of national income, so it should not be done. So for example, suppose a farmer produces 3 quintals of wheat, he sells the wheat to a bakery at a price of rupees 1000 per quintal. So the value of wheat sold becomes rupees 3000. The baker converts the wheat into bread and sells the same, bread, to a grocer for rupees 5000. The grocer sells the bread to ultimate consumers at rupees 7000. So the total value of all these transactions, or the gross output, is 15,000. That 15,000 is nothing but this 3,000, this 5,000 and this 7,000, in which the value of wheat has been counted 3 times and the value of bread 2 times. That means the value of wheat at the farmer's hand, the value of wheat at the baker's hand, and the value of wheat at the grocer's hand. So counted 3 times. So value is always counted. So the value increases, and the value of say wheat is also counted 2 times. That means as a product of the as a product of the baker, as well as a part of the product of this grocer. So this is called the double counting. This is a clear example of double counting. I will show this in the table form also. Now let us see, we have 2 methods for avoiding double counting in national income calculation by the value-added method. So what are those? Value-added method, this value-added method, and one more is the final product approach. So according to the value-added method, first of all, we have to identify the intermediate consumption of each producing unit and then calculate the value added by each producing unit, producing farm, at each stage of production by using the formula. What is that? Value added is equal to the value of output minus intermediate consumption. This formula, okay, in order to explain this formula, I'll just take one example as we have done earlier. So we have a table, serial number, then production in value of output, intermediate consumption, value added. So at the farmer's hand, so farmer produces 3000 worth of this wheat. So there is no intermediate consumption, let us suppose. Then baker, this baker, his output value is 5000, and in order to produce the bread, so he used the say wheat worth of rupees 3000. So by subtracting intermediate consumption from this value of output, we get 2000 as the value added of this baker. And for grocer, similarly, his total value of output is 7000, but he used this 5000 worth of say 5,000 worth of say bread, okay, for his selling. So this value of output minus in the Vedic consumption 7,000 minus 5,000, this is 2,000. So by adding up all the value added, we get 7,000. So thus the value added by all these producing unit is rupees 7,000, this 7,000 and thing, but the addition of this 3,000, 2,000 and 2,000 go. So there is no scope for double counting in this method. So we'll see next the final product approach. So next the value added method. After value added method, we have the final product approach. According to this method, we should take the value of the final product only. Final products are those products which are purchased by consumers for consumption of say consumption or purchased by the farm. That is for investment, maybe machinery and all. And in our example, only the value of output of the grocer, that is rupees 7,000, is taken as final product. It is because he sells his entire product to the ultimate consumer. So therefore, according to this method, final product method or final product approach, the value of the final product is 7,000. So in this case also there is no question of double counting. So in the concluding part, I will just explain about the precautions to be taken off while calculating national income by the value added method. So some items are to be excluded and some items are to be included. So we get confused sometimes. So all the factor services will be included, all the value of the factor services will be included, but some of the items are to be excluded. For example, value of sales and purchase of the second-hand goods. So second-hand goods value will not be taken into account while calculating national income, because the value of that product itself, so during the fast-end period, so it was already counted in that year when the product was produced and sold. And next is the value of intermediate goods. The value of intermediate goods should not be counted. It should be excluded because it creates the problem of double counting. Then the domestic services of the housewife. The value of domestic services of housewife is also excluded while calculating national income by the value added method, because it is very difficult, it is not easy to just to calculate. There is no measuring rod for this value, but the services, the value of the services for the pet persons or the helpers, that should be included because we are paying that by value. And the voluntary works. So voluntary works may be for self or maybe for the society. It should not be taken into account so while calculating national income. Then there are some items to be included in calculating national income by the value added method. What are those? The value of production for self-consumption. So we are just producing something in our kitchen garden or in the field or anything, crop, whatever. But all these had some money value. We can calculate that. So that should be taken into account in calculating national income. And on account production of the fixed capital. So we may be producing some fixed capital by ourselves, but that should be calculated. It has some value that should be calculated and it should be taken into account while calculating national income. Then change in stock. Change in stock should also be included in calculation of national income because it is a part of the capital formation. Okay, it is a part of capital formation. It may be positive or it may be negative, but it should be included. So these are the precautions to be taken into account while calculating national income by the value added method. So I'll just try to solve some examples, numerical problems in my next class. Thank you very much for today. So see you next time.